morning, John Head here, Colony Realty with our monthly market update, and it literally is like the middle of the month. So I don't know if we normally call weekday, mid-Wednesdays the hump day. So I think we're in the middle of June. It is the 15th, and I'm bringing to you the MLS statistical reports, but with a couple things I want to point out specifically. So I'm not going to spend a lot of time on the hard numbers of what this report indicates, but I just want to take a few moments and realize that our inventory is still low. Prices are still holding firm. We're not pushing the envelope. We're not seeing great appreciation numbers or people reaching for 15 or 20% over what they bought for in 2021, 22. But the reality of it is, with very limited inventory, it's still a great market, and supply and demand is still there. So I'm going to focus on this particular screen here for a moment. And I want to look at right here, if you can see my mouse, hopefully say residential median prices. And you'll see in 21, they were 470. In May of 22, they were 595. Now they're 537, indication of minus 10% over this time last year. National Association of Realtors and a lot of people use median price points to kind of judge where the market is going. This is not a true indicator in a market with very tight inventory and pretty relatively quick sales. Although our average days on market now, I believe, is just up. It was 94, it's now 99, so it's climbing up a little bit. So I just want you to keep in mind that median price is, right now we're selling more lower priced properties than higher priced properties. It hasn't affected the value of any one property. So if you had 2 dimes and a nickel in your pocket, your change in your pocket would be average at a dime. But if you had 2 nickels and a dime, you would have 5 cents roughly is the way the median price works. But that doesn't change the value of either the nickels or the dimes. And that's what's happening with this reporting that we're seeing in the news, and bad news sells, because we're all glad we're not the victim of the day. But the reality of it is the predictors of the last year were not correct, with a hard reset in the real estate market. And so we've renamed the COVID years to unicorn years, because COVID had it was tough for a lot of folks, and a lot of sorrow and loss. So we're going to refer to those couple of years as unicorn years now, because they're anomalies. We couldn't have predicted how fast and hard the market and real estate was going to jump, and especially in our second home markets. And so I just want to share what I think is happening. You've heard me mention this before in my previous reports, that I thought we were not going to see any appreciation. We might see a little negative dip, which we have, but I'm going to bring up a couple of if I can get this to pull up for you. So I'm going to focus more on these. These are Case-Shiller, FHFA, and CoreLogic. And I'm going to bring in a Zillow screen here real quick too, because they all are very similar. So last year we had a good run up, and then we saw a dip after all the negative news. And then here we are starting again. Now, it's only through March, but we're already climbing through some numbers. So again, I'll re-reference. I think we're going to come back to some historical norms. If we're going to kind of come to a 5, maybe to 10% appreciation rate here on the Outer Banks in the second home market. And so it's still a good, healthy market with limited inventory. And I'm going to show you that in just a moment. Let me pull this one over as well. And I just want you to see the trend lines of all 4 of these reports. And as realtors, we're not grand fans of Zillow's estimates and the like. But the reality of it, when you take the 4, you see what's happening. And every company that does these studies use different algorithms and different metrics to derive a number, but you'll see that they're all tracking the same. And that's what we're seeing here locally in the Outer Banks. And those of us who love it here and hope to stay is great. But if you're thinking about selling, you're still in good shape. And buyers, as far as the interest rate, I think that if the Treasury takes the foot off the gas, that's the best thing I can say it, and not do another increase right now. The average between a 10-year Treasury and mortgage rates has been, there's a number that they have to make, and that has been averaging about 172 basis points, or 1.72, and that's now 3.92. So if they pull off the interest rate hikes, I think if we see that drop back down to 5, we're going to be in another swell market because 5% money on real estate is still reasonable, cheap money. So I will share one last little thing here because I want you to concentrate on not focusing when the news media says the median price houses are down 15 or 20%, wherever you're living at, wherever you're seeing the news. Median sales price measures the middle price of homes that have sold, meaning that half of the homes sold for a higher price and half sold for less. It is not a very useful for measuring home price appreciation because it is affected by the composition of homes that have sold. And that's what we're seeing. So the higher end $1 million+ house is a little slower to sell. The 500 to 750 is still a pretty brisk market here. And so I just want you to kind of understand that. Obviously, review the statistics. If you have questions, if you're thinking about selling or you're thinking about buying, reach out to one of our team members. But if you're thinking about buying, reach out to the person in this link. If you'd like to speak to me directly and have questions about any of this information, you can reach me at john@colonyrealtycorp.com, JOHN@colonyrealtycorp.com, or on my cell phone, 252-592-4629, 252-592-4629. So I hope this has been helpful. The bad news, everybody's now projecting that we're going to see a recession in the fall. Our numbers aren't indicating. So I'm going to leave you with this last little tidbit. You will see year-to-date residential sales here. Let me pull back up here. All inventory, you'll see right now it's down 14% at 767. I want you to keep in mind that all of our inventory encompasses Coroba to Ocracoke for the most part. I don't work that market very much off the road pavement or down in Ocracoke, so I limit my searching to just Corolla to Hatteras Village. Everything inland of us it's just not the beach. So I do include Manio, and I want you to see these numbers quickly. Right now, with that being said, just single family homes, there's 201 for sale from that range. Corolla, all of Corolla, all of Hatteras Island, Manio, and Wanchese. So we're close, we're on the water, but not specifically on the beach. Out of that 201, 2 are pending, continue to show. So there's 199 homes for sale, and you'll see that there. Key factor here for us is right now we're coming back to where we were. You've heard me say before, under 30 days to sell. Now we're averaging 99. So it's taken a little longer, but the reality of it is still the market's good demand but limited inventory. So again, if you have any questions, reach out to us here at Colony Realty Sales Team, and we've got a great team. You can reach if you're thinking about buying or selling. Sylvia, Vicky, Belinda, Bonnie, and our great admin staff. I can't not talk about, if you've done business with us, we are heavily weighted on admin. We've got Brandy as our team manager, got Nicole who does all our listing coordination, and we got Christian who does our inside sales and works directly with the buyers through the contract to close. So we're thankful for them. If you'd like to learn more about our team and how we operate, or any real estate related information we can help you with, give us a shout. Sorry to get a little winded here today. I like to try to keep it to 5 to 6 minutes, but I'm at 8.43. Happy days till we see you here at the beach. Take care.